looking at technology, it's one of the most fascinating parts of trading, just exactly how we've gone. I mean, if you can take news, for example, the way that markets, which are great, brilliant aggregators of news, have now Twitter. Who do you follow on Twitter? What sort of news are they providing us? Does it give us that first mover advantage? It's what separates us from previous cycles, the ability for traders to react much more quickly. Better than we've ever seen. Okay, some people look at the fact that you've got news reading algorithms which give people even more competitive advances. But for us as retail traders, we can get news breaking from central bankers through economic announcements, through OPEC announcements much more quickly than we could have done 10, 15 years ago. And I think from that perspective, it does give us an advantage. In terms of our actual ability to execute and give us best execution, I mean, us at IG have seen huge technical advances over the years, be it through providing best in service iPhones to a great trading platform and good charting as well. And I think those sort of situations, I mean, what we've seen in terms of the percentage of clients who place trades through smartphones and these bits have changed dramatically over the years, and one wonders where we're going to be in another 10 years and what sort of devices will be out there for publics to trade on, the speed of execution that can come through, how people and the trends we're seeing there. So I think from a news perspective, I think from execution perspective, it's all very fascinating stuff. The concern I have is that when you hear statistics that something like 80% of the flow that gets transacted over the New York Stock Exchange nowadays is done through high frequency trading. Us as retail traders don't have access to the ultra high frequency networks, and these networks are becoming ever more sophisticated. But does that put us at a competitive advantage? It does to a degree, but we need to adapt. We need to work at ways of how we can adapt and go along for the ride there as well. I think technical analysis is absolutely key there, and making sure that you do have a strong risk analysis that's going through. So, understand an event that's coming up, understand the risks that are going through, how my position is affected by what the different permutations of that, what liquidity is like in the market. Because if you go back to August 24 last year, where we saw the big quasi flash crash, that was driven by high frequency, but also this illiquidity in the market, and it's understanding how that all works that can really help you out as well. So, I think markets are going to change. They're going to continuing change towards a high frequency turnover, but we need to adapt and go along with that as well. In terms of what's affected me, I think the development of Twitter has been really important. I mean, I'm absolutely addicted to finding out news flow and understand how that works out, going onto my IG app and having a look at the prices real time and understanding how the market's moved. I think just being able to look at those things real time has given me, keeping me in the loop in everything that's going on 24/7. I mean, whether I wake up in the morning at 2 o'clock to check my positions, another thing. But I think just being able to, if I know there's a period of news and I'm out and I can quickly check my iPhone to understand what's been going on, it can give me a clear sense whether I need to adapt that position. So I think news and the adaptation and the changes we've seen there is a huge situation. But the ability now for traders to stay on top of the markets at any stage, I think is a real edge as well.